Hey gang, Akil Stokes here of Trade Empowered. Wanted to do something a little different this morning. Actually want to kill two birds with one stone. Wanted to do a quick video for the general public, just breaking down my thoughts on the euro dollar and what could happen next. And of course, also got some more things that were on my syndicate radar. So instead of doing two videos separate, because these things do take a long time to produce, I decided that I'm going to do one video and just split it up. So I'll put the first part out to the general public, then syndicate members. After I'm done talking about the euro, just hang on for a split second, and I'll get into a few of the trades that I have for you guys. Let's talk euro dollar 4 hour. Now, syndicate members, you know that yesterday I had a whole bunch of analysis on here. I had a bigger potential Gartley pattern looking at X to A to B, B to C down here at the time, then C to D. And then I was talking about, we also had a mini cipher pattern here. You can't really see it on this time frame, but gotta trust me. There's a cipher pattern completing in here and as well. And of course, it was one of those dilemmas where traders are probably going and saying, well, do I take the cipher? Well, if the cipher busts, then do I take the Gartley? Do I take both? And well, as you can see, all of that analysis was for naught as the market continued to spike down. You know, messing up the good time I spent yesterday doing a video, and a lot of the charts around the market were like that as well. But that's trading for you. You take a lot of time. You take a lot of time to do analysis, only to see the market not go to your direction, and well, then you erase it and you start all over again. So that's what we're going to do here today. I'm going to talk about where I think euro dollar is likely to go, and if you've been with me for a while, you know that this candlestick right here, this big black bar, is very important to me. Why? Well, because it gives me a lower low, lower close. If I draw a red line on my recent lowest structure point, you'll see that we break and close below it, L3C, which always tells me that, or allows me to make the prediction that this market is most likely going to continue lower. Next question I want to ask myself is where. So the first thing I can do is this. I can bring in a Fibonacci retracement, take my swing low from down here at 27.45 to our most recent swing highs, and I can say, all right, we already passed the 382. So most likely we'll come to some Fibonacci point. There's a 50% in here, 61.8, 707, 786. We'll go to one of those Fibonacci points. Now that doesn't really help me out much, but it gives me a starting point. Next thing I can do is this. I can take a Fibonacci extension. So let's take it from our most recent swing, this swing high right here, up at 32.02 to our swing low and back up. I'll see that we're going to have a 127 extension here at 129.46. Looks like we'll have a 1414 right in the middle near that 618. Yep, right, that 618. And we're going to have a 1618 a little lower. So again, one of these zones is where I'm looking at. So I can shorten it up a little bit. The 786 probably won't be as important as somewhere in this area. Next thing I'll do is this. Take my ABCD pattern. And essentially, guys, I'm just running through my CTS score. Take my ABCD pattern, measure that same move that I took the Fibonacci retracement from, or extension from, and say, hey, if we get an ABCD pattern, where is it likely to come to? All right, well, now I got a little clearer view. I can see this ABCD pattern, this D leg is going to come in right near my 618 retracement at 29.19 and my 1414 extension. And if I even do this, if I take my Fibonacci inversion from my B leg or my C leg back to my B leg and back up, you'll see that we're going to have a 1618 Fibonacci inversion there as well. Let me actually delete some of this stuff and see if I can get a little more clear for you guys. So right now, this level, 29.19, is a key level that I'm going to have on my radar. 29, 23s, 29.19s is going to be a key level. Now, what I also want to do is look left. If I zoom out left, I'm going to ask myself, well, where's the next structure level at? And if I make the line I just drew, and let's change that to a different color. Let's make it crimson and make it dotted so it stands out. That's going to come in right at the top of this DSR level. And if I create a zone down here as well, if I take the real lows of this DSR level again, change it to a different color, you'll see that this lower structure level actually comes in at a pretty important part as well. Not only do we hit structure once right here, twice right here, 3 times right there. When we come back, you see we hit it. We actually have an inverted head and shoulders at that same level, so 4, 5. A retracement right here, 6. 7 times we hit this lower structure level. And again, that lower structure level is right at my original 1618 extension from that leg. And if I take that Fibonacci retracement, again, take out that 786, bring my 707, I'm going to have Fibonacci confluence there as well. So I have a powerful structure level, really powerful structure level down here at 128.80s, 128.75s. And I also have an ABCD pattern with Fibonacci confluence up here at, what's this, 129, 129.20s. So I don't know which one the market's going to stop at. Obviously, the ABCD comes in first. The structure level comes in second. But all I'm doing for this exercise is predicting, making a prediction. Where is the market likely to go next, and where should I be alert? What should I be alert for if the market gets to this level? So, want to break down the euro for you. Matter of fact, real quick, I'll tell you how you can actually catch this move on the way down. If you were to go to a lower time frame, let's bring up see if I can find a euro dollar chart somewhere in here. If you look at a euro dollar chart on a lower time frame, let's say a 60-minute. How you can catch that move down is a simple trend continuation trade. Again, you can see my DSR levels on there in green. We just wait for a simple retracement back into the structure level. So I can take a Fibonacci retracement from our last move here, swing high to swing low. And you can see that 3D2 is going to line up right at with structure. And over 50% a little higher. So if the market comes back and gives us a nice retest of structure, you can use this as an opportunity to look through your rules and say, do I have something in my plan that says I can get short? What type of entry can I use to get short this market in anticipation that we're going to travel down to the lower levels I talked about. So that's it. Want to break down the euro, give you something to look for. Well, probably what happened was I'll put this video out and the market will have a big day and rally up, and again, all my analysis will be for nothing. But that's the fun of trading. And if anything, take from this video how you can make some pretty not want to say accurate predictions, how you can make some pretty good predictions just based on price action, based on structure, and based on the basic tools that that you've learned or that you've been taught through this training course. So, Syndicate members, hang on 1 second. I'll be right back with a few trades I have on my radar. For the rest of you, have a great trading day, and always remember, plan your trade, trade your plan. Take care.